Hi, so it's time for another quarterly portfolio update. Now, my portfolio is far from perfect and it is a work in progress. I think around 10 investments is a good number, and that is where I think I will get to eventually. Now, I'm always going to be evolving as an investor, so I probably will never think it's going to be perfect. And please, look, don't buy anything that I have bought without doing your own research. That would be idiotic, as I'm not very smart and my entire portfolio might be awful. Maybe these videos are a starting point for some of you, but that should be all it is. And for those of you who are new here to my channel, well, welcome aboard. So every quarter, the big funds like Berkshire Hathaway, Appaloosa, Third Point, Pershing Square, they all reveal what is in their portfolios. And it's good practice for when my portfolio gets as big as these funds. I'll first go through the things I bought and sold in the quarter, then I'll go through my performance for the year so far. After that, I'll show you my current portfolio as it stands as of the 1st of April. Now, when I look back at where I was 12 months ago, I have dramatically improved my understanding of investing, so I'm excited by the next 12 months. There's a lot of learning to compound. By far the biggest reason for this improvement was making this YouTube channel, but the second biggest reason was the fantastic books I have read. Now, I get a lot of people asking me to make a course teaching investing, but look, I don't want to make a course. I actually don't think you need a course either, because these books that I've read are far better than any course. So in the description, I have a list of the books that I highly recommend. Now, I've read all of these books at least twice now, and I still get a lot of value from them. So instead of going through a course, look, read all of these books and that will be far more valuable. And if you buy these books from my links, look, you don't pay any extra, but I get like 50 cents from Amazon, and that's pretty cool, I guess. All right, so let's get into it and start with the changes that took place. So just a couple of changes for the quarter. There are 3 new buys and a sell. Now, for those who have been following along, last quarter I spoke about the Nova lifestyle investment and why I was looking to build a position in this company. Now, this was a net investment where I calculated an estimated liquidation value of the company of about $20 million. Now, when I bought into the company, the market value was less than $10 million. So I was looking at a pretty great margin of safety. But since then, the price has shot up and got to almost $20 million in market cap, where I think that is about its liquidation value. Now, I've just read the annual report. It came out like the last week of March, and the company has had a very difficult 12-month period, and I just don't think they're going to turn it around. So they will most likely lose money in the future, and that will bring that liquidation value lower and lower. So I made the decision that it's a good time to sell. I made over 75% return in about 5 months, so it moved to fair value far faster than I expected. Look, I'll find better uses for my money. Now, I would love to take over this company and liquidate it, but the price is just too high for me to bother with this at the moment. I'll keep an eye on it just in case the price crashes, but I'll most likely just move on. Now let's move on to the 3 new buys. So check out my full analysis of Markel that I made in 4 parts. I used Markel as my example for my checklist, and look, here's a bit of a summary. Markel has long-term owner-friendly managers. They have profitable, conservative insurance operations. They have superior investing results, compounding book value at about 13% for decades now. And there's a lot of long-term potential here. I think they're a compounder with big upside. Now, there are of course some negatives that might derail this, like a big stock market crash or something like that. But the business is in great financial shape, so I feel very confident. Markel's going to be a nice stable part of my portfolio that I plan to never sell. In January, I was able to buy my first allocation at $1,000. I was hoping to buy more at $900, but it didn't get that low. I'd buy more in the future at $900 if the price was to fall to that level. I was lucky to get a pretty big stake at $1,000 anyway. Nintendo I have been watching for quite a long time. When I first analyzed the company, I thought a great price would have been about $40. But 2020 was an exceptional year and they made a lot of money. And that changed my valuation quite significantly. Now, I was happy to make an initial investment at $73 just to get started. Now, I'd love to buy more over the next few years. They have fantastic brands with longevity like Mario, Pokemon, Zelda, Animal Crossing. The gaming industry is a great industry to be invested in, one of my favorite long-term investment areas. They have many expansion opportunities as well, with Nintendo World, which is going to be a little bit like Disney World, VR, like virtual reality stuff. They've got movies coming out soon. Then they can also just roll out more retail stores. They also have a very conservative balance sheet, yet they're fast growing. They don't need debt to grow. And management are long-term minded. They're not chasing short-term profits to please institutional shareholders. They want to please their customers, and that is what's most important. Now, the major negative I see is that they are just already way too big. So look, it's probably not going to be a 100 bagger, but I think I can still get great returns over a decade. Nintendo are probably one of my favorite companies, and like Markel, I plan to hold this for 10 years plus. Again, I have a full analysis of Shinken here on YouTube where I go through this in far more detail. I only just bought this one in March, so this is pretty new for me. The positives I see are they're a small company in a massive market and their potential is really big. Their historical growth has been very impressive as well, more than 20% per annum for a long period of time. And the management team has managed the company well. The CEO also has a big stake in the company, and the current price gives a good margin of safety. And finally, Monish Pabrai has invested in the company. Now, this makes me feel a lot better about the investment because he is far smarter than me. But watch my video for the negatives, as it's important to understand both sides of this investment. I was able to buy a pretty good sized parcel of Shinken, and I'm still planning exactly how big this position will get. It might make up a big part of my portfolio. I'm just giving myself some time to think more about it. Okay, back to my portfolio now. Now, I was up about 13% for the quarter compared to 7% for the overall market. Although this is a great result, I think it is far better to judge me over a longer time frame, like 5 years or a decade or something. One quarter doesn't really mean anything. It's highly likely that at some point I'm going to perform far worse than the index, and the longer time frame is what's going to be important. I'm also holding way too much cash, which is good for when I find something, but bad because I'm missing out on upside potential. I'm leaving money on the table by not being fully invested. And what I have been doing with my cash is I have been getting pretty good returns by selling put options, so it's been working for me at the moment. This strategy has been great while I'm waiting to buy something. Okay, now with all that cash, I have been having a good time selling put options while some stocks that I like have had increased volatility. If you have no idea what a put option is, it is worth learning about, and I tried to explain it in a previous video. Now, I have sold put options in Etsy with a strike price of $150, also Dropbox with a strike of $20, and Seritage with a strike of $10. I got fantastic rates on all of these, averaging an annualized average of about 16%. I hope I actually get to buy some of these, but most likely they will expire and I'll try to then do it again. Okay, I think about my investments in 3 different buckets. We have the rocks, so Facebook, Markel, Google, Prudential, Bank of America, Skyworks, Nintendo, Berkshire Hathaway. These are my rocks. I think these will be enough diversification and growth that I can sit back and relax. See, I was reading about Guy Spears' experience during the global financial crisis, and he said that when the world was falling apart, having a handful of super stable companies with a lot of cash in the bank really helped him think clearly in this chaos. These companies, although I think will outperform the overall market in the long term, they also give me security in the inevitable bad, scary times. I'm eyeing off Amazon as another company that I would like to include here. Then we have what I call the potential rocks. So Shinken, Middleby, Dropbox, and Global Cord Blood Corporation. These have the potential to be rocks of the future. They're strong businesses that I believe have the potential to be a lot bigger and even more stable in the future. I think of them as like potential graduates into my rocks list. Then we have the 50-cent dollars, and these are the oil tankers. These are not going to be my portfolio in 10 years' time. The thesis is specific and will either play out or it won't. I actually will not do investments like this in the future, as I think there are plenty of longer lasting compounders out there that I can invest in. But I still think I will do very well in this investment. So look, I'm not worried at all. These are a cyclical play, and eventually when the world oil demand returns almost to normal, these companies will make a lot of money. These stocks have been just neglected, and I think good times will return to that industry. So I think my plan will be, when this investment has played out, I'll be trying my best to move the money into the potential rocks section. I'd like my potential rocks to be the biggest part of my portfolio. Okay, let me summarize. So we had 3 new buys and a sell. Pretty happy to have invested in 3 new companies, really. Shinken was the first company that fits my new goals that I want to follow, like Monish Babrai's idea of smaller cap companies. This is what I am spending my time doing, and I think this is the area I'll be buying into far more into the future. Now, my cash position has reduced a little, but I think it's still strong. I like my cash position. I get to use it to make extra income by selling put options, and I still have plenty ready to buy when I get good prices. And what I'm doing a lot at the moment is just turning over many rocks. I'm on the lookout for small cap companies that are growing well, profitable, stable, well managed, and at a fair price. It sounds impossible, but if I just keep going, maybe I'll find even one. Now, of course, I plan to update this every quarter so you can follow along and see how well I'm performing. I hope this was something you enjoyed looking at and seeing exactly what's going on. Now, don't forget about the books in the description below if you were trying to learn more. If you're experienced, there's some great books in there as well, and if you're a beginner, it's perfect. And if you appreciated this level of transparency, please give the video a like and make sure to subscribe to keep up to date. Thanks for watching all the way to the end, and I'll see you in the next video.